market makers out to get you? The general consensus among many retail traders is that they believe that market makers or the banks, the institutions are out to get them and out to get their stops. So I've pulled up a chart here of just the euro dollar that we can use to discuss this very subject. And because there's plenty of people out there preying on retail traders saying, look, they're out there, they run your stops. This is why you get stopped out so much, because you've got your stops in the wrong position. And of course, to the average retail trader, they'll be like, oh yeah, I get stopped out a lot. I must have my stops in the wrong position. You succumb to the marketeers who tell you this stuff. The reality is that the big institutions do not care about you, the retail trader, and even as a collective of retail traders. They are not trying to push the markets around to come and get your stop necessarily. So the markets are a mechanism for fulfilling orders, but there's not some conspiracy that the markets are there to come and get your stop at a certain level. And let me prove to you that that's the case. Because if that was the case, then every time there was a low like here, or a low like here, or a low like here, then the market would come back down and take that low out and then go back higher again, wouldn't it? So, and do remember that if you have a period like this, where we've had this general prior period here in the euro dollar where the markets have been going up, most retail traders are shorting it because they're idiots. Because they don't know. They're just short as soon as the market starts going up, because they think, well, it must come back down. And that's the level of the retail crowd. So most of the retail traders out there are doing the institutions a favor, because they are shorting as a market's going higher anyway. So yeah, don't fall for this narrative that institutions are out there to get you. You're just not big enough, even as a collective, that it's just not, that's not their job. Their job is to fulfill orders. And don't get me wrong, there are bigger players at certain times, and either in quieter periods, then markets can get pushed around to take out little minor highs and lows, maybe intraday during quieter periods of lower volume periods, or when markets are in maybe a sideways range. The natural tendency is that markets might just come out, just nick the top end of the range and then come back into it again. It's not a conspiracy though, that's just the natural function of the market. And really, you need to get over the fact that, and I say this, I'm talking to those sorts of people out there who are so worried about getting stopped out. Embrace getting stopped out. It doesn't matter. The reason it matters to so many retail traders is because they don't run their winners. So if you ran your winners more, then they would pay for your stops and you're making good money. The reason that retail traders worry about their stop losses and getting stopped is because they're not running their winners enough. And also bear in mind that if you do get nicked out on a trade, and I get nicked out on trades, let's say, I don't know, you decided to get long on, somewhere over here, and then it's just come down, maybe stopped you out, you've had a stop below these wicks down here, it's stopped you out here, then gone higher. Well, a lot of the time, if that's your analysis, you can always get back in, rather than worrying all of the time about having to have a stop farther and further away, because all that you're then doing is affecting your overall risk reward profile on all of your trading. So that's my tips for this week. Don't worry about it in the main. Of course, if you have your stops so close to the market all of the time, then that can become an issue. But in the main, if you have a stop below a low or above a high, yes, it's potentially vulnerable, but I've already shown you plenty of examples where a high has been made and or a low has been made, and price moves away and doesn't come back to it. So don't fall for the conspiracies. Just focus on your process of trading, being the best trader you can be. Don't worry about being stopped out. That's a natural process. What you really want to be worrying about is the winners that you are in. Are you running them enough to give you greater profits than the losses that you take when you have losing trades?